It appears the market has not shaken off the holiday blues after the long weekend. The all-share index closing down today for the first time after 4 straight days of gains.
Absolutely. It would be expected so. I mean, first and foremost, of course, we were in a holiday, and then it's a Monday, so it would be expected that the activity levels would be lower as the market warms up towards performance in the course of the week. You would realize that the banking sector, which has been driving the market in the past, is right now, I mean, the investors are trying to scratch the surface, essentially taking profits from the speculative pressures that were there for the Q1 results. And so it's been a relaxed day, but of course better performance is expected in the week.
And would we say there's an element of people expecting those half-year results to start coming in any time now from especially the banking stocks, and therefore everybody's taking a bit of a wait-and-see attitude?
Yes. I mean, the banking stocks essentially have been driving the market in the past, and is expected to mount on a considerable amount of influence in it in the coming weeks as they await results for the Q2 results. That will affect the market in a great way.
Is there concern also about security right now, the political uncertainty? Al-Shabaab, the militia group that is allied to Al-Qaeda, has said and has threatened more attacks against Kenya, especially in the next 6 months, according to a report out of an American consultancy firm. Are investors reading any of this?
Well, political risk has always been there, and that, of course, tied to the issues of security. But I mean, from what I have observed, I mean, investors are really not moved by this. It is a small factor. Somehow it affects the activity at some level, but it is not something that is going to lock out investors from the market. We are still going to see very good performance. Obviously, probably towards the elections, they may develop cold feet here and there. But yes, as for now, it's not a big thing.
Safaricom closed up today 1.5% up at 3 shillings 30 cents, which is a good thing considering the share still well below its listing price of 5 shillings. But after those reports of interconnect arrangement having been struck between the 4 mobile operators, investors appear a lot more confident with the stock.
Yes, I mean, Safaricom is in a good industry. The telecommunications industry is delivering good results. That said, they themselves have come up with a very good strategy to pursue profits at the expense of price wars. I mean, all that added to the fact that now they have come up with an arrangement to lower the interconnection rates would make Safaricom still very attractive. And that's why it's rallying as we are speaking.
The other one which I want to touch on is Sasini, which today closed 2.4% up at 13 shillings. There's 2 aspects of this, one of which is the Kenyan Met Department is forecasting better rains, and as an agricultural nation, that is good. But the other one is just general sentiment. Sasini plays in a field which Java also plays in, and Java just saw some investment from a private equity firm, ECP Partners.
Yeah, when the dollar is high, as it is right now, investors tend to, look for stocks and counters that can shield them against the high rate, the high forex rates. Agricultural stocks has in the past played that role because essentially they export a lot of produce, and so making them to do profits, especially when the dollar is high. Sasini, of course, is seen from that angle, that one, it will shield the investor from high rate of dollar, and 2, it will also, given the good rains that have been experienced in the country, this year, it will perform well. And so this would make any investor to consider it seriously.
Let's talk about the shilling, William, which fine today. It has strengthened slightly compared to its close on Thursday, but still not in the best patch right now. Yeah.
Well, first, you'd realize that, like we talked last time, the dollar has been strong. The cost of oil has gone up. Among other factors, the euro crisis, which, Europe is a very good is a key importer of Kenyan goods. Now, all this added to the fact that Kenya is importing a lot that it is consuming would make the ground to not be very strong for the shilling. Given that the Commercial Bank of Kenya, the Central Bank of Kenya, has made considerable effort to sustain the shilling, I mean, I would say that so far not so good, and I do not hope for any good news in the future.
If you are a fortune teller, and I know you're not, but what do you think the central bank will do, the Monetary Policy Committee will do with the CBR?
Well, on the one hand, I mean, the options that are there are either maintain or probably push the rate higher. If they push the rate higher, of course, that would really affect the economy, and growth will be affected, and the constriction will be felt all over the country. That leaves them with the only option on the table, which is maintain. And so it is expected that they will maintain at 18%.